Hey, what's going on, guys? Hope everything is going well. Now, I wanted to do this video about the Chinese Yuan devaluation. As all of you know, the Chinese devalued their currency the past week, and they did that, in my opinion, because they wanted to make sure they could export. You have to remember they have a centrally planned vision, and they want a weaker currency because they feel that exports will be stimulated that way, and they could improve their trade balance. This is what a lot of these centrally planned economists believe in. They believe in a weaker currency stimulates exports. I believe that this is only a short-term fix, because in the long term, other countries are going to copy what the Chinese are going to do. They're going to devalue their currency as well. So there's a no-win situation. It's a zero-sum game in my opinion. However, others may disagree with that notion. Secondly, why would China want to devalue their currency? Well, this could be an admission that economic growth isn't so hot in China. Some people would say, hey, look at the stock market, it's going up. Yeah, the stock market was going up, but at the end of the day, that was fueled by central bankers and that was fueled by margin debt. And we saw a correction happen in the summer of this year. But that being said, what I noticed last year in China was a slowing down of the economy. How did I notice that? Well, you have to look at the interbanking lending market rates for China in 2014, late 2013. You saw stress in these markets. And long story short, with this fractional reserve banking scam, individuals or bankers, they borrow at low rates and lend at high rates, right? Especially long-term illiquid securities. And this Ponzi scheme only works when the economy is doing well. When there is stress in the interbanking lending rates, you start to see all sorts of problems. People can't roll over their debt, long story short. Best way to put it. And this is what happened with Lehman Brothers, Bear Stearns, and all these mega banks and subprime. Now, fast forward to today. Still see the ghost cities. You still hear stories of how the economic data of China is not so great. So, hey, China believes that devaluing their currency will alleviate some of the problems. But I don't agree that it will solve the problems. It's just a short-term fix. This is how the central bankers operate. But in the grand scheme of things, if China is slowing down, one of the top economies in the world, what does that mean for the rest of the world? When you see the United States economy, it is the best out of all the other countries, but that's because all the other countries are facing worse problems than the United States. And I would say that the United States has many problems as well. Many structural problems, which Bernie Sanders nor Donald Trump will fix, in my humble opinion. Now, if you want to look at Europe, I've been talking about Europe for the past few months. I did a video a few months ago but it was labeled the Euro crash, how I said that I wouldn't be surprised if the Euro goes to 80. Right? I didn't do anything with trading because the euro had a sharp move to the downside, the euro USD actually. But then I waited till like 111, 112, and I've been trading around it. Every time it pops up, just short it. Every time it pops up to 112, short. It's been working so far. That doesn't mean that it's going to work continuously. Just have to reiterate that. But what I find quite interesting about Europe, you see the euro at 1.11 as of right now, and I saw Draghi and some of his other buddies say that, hey, you know what? If there are more problems in Europe, if there's more slowdown, economic contraction, what we may do is we may tweak QE. So if they tweak QE, meaning they're going to increase QE, what's that mean for the currency? The euro is going to go south. Even if the United States decides, hey, we're not going to raise the Fed funds rate in September. A lot of people are saying they're not going to do that. A lot of people say that they're not even going to do that in December. Okay, suppose that Yellen says we're not going to raise rates because of the deflation threat. You may see a short-term bounce in the euro and the dollar goes down. However, even if that happens, what Mario Draghi could do and what the Bank of Japan with Shinzo Abe, what they may do is they may have more QE. If they have more QE, what does that mean for the US dollar? The US dollar, as crazy as it sounds, will go higher, even if they don't have QE, even if they don't raise rates in September or December. Right? I think they should raise rates, even if oil prices have come down, gold prices have come down, commodities have come down. The reason is savers are getting screwed over at the expense of these gamblers on Wall Street. So I want to see higher interest rates. We can't have zero interest rates in perpetuity. Look at Japan. Japan's a mess. Now, you have to look at that. So if Europe announces QE, or Japan announces QE, the dollar's going to go up. Despite how people are talking about no interest rate hike. So that's really important about this China slowdown that many people aren't talking about. I see a lot of people saying that, hey, the dollar's going to go down. You're going to see gold and silver, commodities have a huge short cover rally because of that. And like I've said before, over long periods of time, I do believe gold and silver are good stores of value. But just within the short run, with this QE madness by other central bankers, such as the ECB and the Bank of Japan, you may actually see more pain in commodities, as crazy as that sounds. And you may see the dollar index, the Dixie, just go up. And you have to remember, this is basic mathematics. I'm just taking out my Austrian bias out of this, okay? Your Austrian school perspective, I'm throwing that out the window in the short run. Long run, these guys are more right than wrong. But the dollar index is composed of the euro, the yen, the British pound, and a few other fiat currencies, which consists of the dollar index, most percentage-wise. The Eurozone, right? The euro, right? And many people don't get that. So if the Eurozone installs more QE, the euro is going to go down. And because of the composition of the dollar is going to go up, as insane as it sounds. I have to say that over and over because this is just crazy madness. So 57.6% of the dollar index consists of the euro approximately. And then the other 10-11% consists of the yen. And we know that the Japanese are reckless as it is when it comes to monetary policy. So you have two horrendous currencies in the dollar index. If those go down, the dollar de facto goes up. Now, when in a few years or whatever the time frame is, when the whole system blows up, whether it's a muni bond blow up, whether it's a pension fund blow up, derivatives blow up, whatever the blow up is, the dollar in the short run is going to go up, but then what they may do is they may do what FDR did, just devalue the currency, maybe against a hard asset like gold, or they may introduce a IMF currency. I don't know. Just that being said, short run dollar index up, right? We may see pullbacks, but still dollar index going up because of the China slowdown and the euro slowdown, Japanese reckless monetary policy. I could go on and on and on. But anyways, leave your thoughts below. Talk to you later. Bye.